Good evening, everybody. Let's go ahead and get started. Want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there in the chat box just to let me know that you can see me and you can hear my audio. That'd be great. Awesome. Okay. Great. Looks like we're up and running, ready to go. Love coaching this class. This is one of my favorite classes to coach. I do this twice a month. Kind of mix it up a little bit how we do it. This time we wanted to make sure we cover the full box and the half box strategies for the overnight system, right? We want to kind of discuss the two, make sure you guys know how to trade them, and then we want to go over the pros and cons of each one. And then at the end, hopefully that gives you an idea on which one makes sense for you, for your goals and your risk tolerance and all those kinds of things, right? So that'll be the three things that we try to accomplish in this call today. All right, and like I said, just want to welcome everybody here. Want to give a shout out to those of you watching this live, and also those of you that are watching this in the recording. Want to say hello to you guys and welcome you here today. Before we get started, and we got to jump into it because I got a lot of stuff prepared and I want to get to all my thoughts and want to make sure we answer your guys' questions. So we're going to go right into this. Let's go over to the disclaimer. As always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. Also, just want to, before we get started, want to give you guys a chance for those that are new to the program. Like if you've signed up in the last like 2 or 3 days, probably let us know what state or what country you're from so we can welcome you here. It's been fun to see a lot of new folks join the program. I think just in the last 2 or 3 weeks, we probably had like 30 new folks join. So it's been I don't know where y'all came from, but it's been a lot of fun to see you guys join, and you're all welcome here. So we have a fun community, and the more you come to these classes, the more you're going to get, and you're going to learn new things every time you come. You're also going to meet people who are like-minded and taking the same strategies and taking the same trades that you're taking, which obviously is great to have that kind of community around you, right? And there's room for everybody. You know, that's the cool thing about trading is there's room for everybody to make money. This is a $7 trillion a day market. There's room for you to make your money. There's room for that guy to make his money and that person, you know, everyone can succeed, and that's what's so awesome about these markets. So this is an environment of collaboration. You know, we're obviously competing to make money, but not against each other. We're all here to help each other succeed, right? Okay, so let's go ahead and jump into this. So overnight trading strategy, obviously this is taking over the industry, right? This has been super fun. Especially this last week, we've had a lot of really good breakout trades. We're going to go into the specific rules, but before I do that, I want to catch those of you that are just getting started. I want to show you guys the results, right? Like this is the full box results. Okay. So since we started the full box on May 1st of 2024, this is the growth over time. This is a plotted chart of every single trade that's been taken with full box. Okay. And you can see the growth of it, right? And it's pretty consistent. Like when you look at a financial chart, like if you look at the growth of a stock or the growth of your 401k, this is what you hope it looks like, right? Something pretty consistent, little bit of a pullback along the way, but nothing crazy, right? And so this is a incredible strategy, full box. We're gonna get to half box in a second, which is also just as good, if not better. The only thing about half box, we're going to talk about the pros and cons of this. It makes more money, but it has bigger drawdowns. Okay, so that's like the biggest pro and con in the same sentence right there. Makes more money, but has bigger drawdowns, right? So we're going to talk about this. But what's so cool about the overnight systems, for those of you that are just investigating this for the first time, is that these are strategies that are meant to be traded for just 10 minutes a day. It doesn't take very long to set up these trades, which is very convenient for most people who, if you're like everybody else and you're busy and you got a job or you got kids at home or something, like this is kind of an idealistic scenario to be able to have something that you can just go in, take your trades, and then wake up in the morning to see how you did, right? um, it's not perfect, obviously there's going to be losses along the way, but as long as you're making money, that's the bottom line. I think that's what we're all here for. Um, so yeah, 10 minutes a day. None of the reason why I love this too is because I used to do a lot of stock trading, like active stock trading, but I got more into Forex. And the reason why I got into more Forex, I think, is because um, stocks are open 7.5 hours a day, and it's during the prime working hours, right? If you have another job, that 7.5 hour period when the U.S. stock market is open is when most of us are answering emails, we're in meetings, we're in calls. Like it's very hard to trade stocks, but that's why I love Forex. It's open 24 hours a day, so you can just go in at night um, and kind of set up your trades before the London market opens, and you can take advantage of that big volatility that's coming into play. So that's the whole point of the overnight system. So let me just go over into the charts themselves. And I think this is a great place to begin, is just by looking at the charts. Okay. I'm a very visual person, so I have to see what we're doing in order to make sense of stuff, right? So as we get started, I think I'll kind of put it together one piece at a time. So let's first start with this. So we trade the euro dollar with the overnight trading strategy. The reason why we trade the euro dollar is because it's the most liquid currency pair in the world. There's 28 major Forex pairs, and the euro dollar is the most famous and most liquid of them all. It has the lowest spreads with brokers, and it's the most actively traded pair in the world. Okay. So there's room for everybody to be trading on the euro dollar. There's a lot of money to be made here. This is also a currency pair that's very active during the London session. And that's important because London is open when, for most of us, I know not everybody watching is from the United States. I get that. So, anyways, just want to make sure I recognize the international folks watching, but that's why we call it the overnight strategy, is because for us here in the United States, the overnight strategy is meant to take advantage of the London market, which opens at 3 a.m. Eastern time. Okay, that's 2 Central, 1 Mountain, and 12 Pacific, right? So it's pretty inconvenient timing to get into the market during London, because that's like literally the middle of the night for us in the United States. And it's too bad because 76% of all foreign exchange transactions take place during the London session and is right in the middle of the night. So I saw this and I was like, how do I take advantage of this? How can I use the London session? And how can I make money during it? And that's when we started coming up with these overnight trading strategies to take advantage of those breakouts that inevitably come during London. So, and it just so happens we kind of like took something that was unfortunate and made it into something awesome, because now we have something that we can dive into that night, basically when work and everything else is done. You can just jump onto your computer before you head to bed and get that trade in, and you're done, right? So it's super. I think it makes a lot of sense, obviously from a standpoint of a busy person, but also from a standpoint of the marketplace and how the markets work. It also makes a lot of sense the way we do it, right? So a lot of transactions take place during London. So that's really important to know, to understand this strategy. So the markets move from expansion to consolidation. So this is the euro dollar here on an hourly time frame. When you look at this euro dollar, what do you notice? There's times when the markets go crazy and they move up fast, and then there's times when the markets go sideways, and then they have these expansions right here, and then they kind of go sideways, expansion, up and down, and then sideways. Okay, so the markets are always transitioning between big up and or big down, and then consolidation, right? Um, it's also known as expansion versus contraction. Okay, so you got contraction when the market's going sideways, and expansion when it's either going up hard or down hard. Okay, that's all you really need to know. Now, and then with that, this is the next important piece. Where do you make most of your money? When the market's in expansion or in contraction? And it really does kind of depend on the strategy that you're employing. But for the most part, most of us make money with our strategies that we trade with when the markets are moving. All right. So if the markets are kind of contracting, it's kind of harder to make money inside of that sideways movement unless you're risking a lot per trade, which is generally not viewed as a good idea. So, and I've tried strategies like that in the past. I've been trading for 13 years. And so I've I've been coached by other folks before that have systems, and they'll take advantage of consolidation periods. But one of the things that I saw when you try to do that is when the markets move away from consolidation or contraction and then they move into expansion, you could lose a lot of money if you're in the wrong direction. So I saw that as a flaw. And so that's when I realized the money that I'm going to make in the markets are going to be made during these expansion times. And so that's when I started designing strategies that are more designed to take advantage of this versus this. In fact, the way we operate with the overnight systems is if the market's kind of contracting, we'll generally lose money, but we try to keep that money to a minimum. But then when the markets break out like this, that's when we just open the floodgates and just accept all the sea of money that just comes in, as long as you're positioned to accept it. And I'll show you how we do that with the overnight system, right? So, so that's important. You kind of have to know, like, when you're building a strategy or when you're trading something, like, what is your approach? Or is your approach to intend to take advantage of these contractions or expansions? And so for me, I've chosen the expansion side. I think it's a lot easier from a risk management perspective to manage risk. And I also think you can exploit huge profits when you're trying to take advantage of this. Now, another thing that's important to know while we're on this topic, and then we'll move on, is that the markets don't spend a lot of time during expansion. In fact, let me do a little exercise with you guys real quick. Look at this huge move on the euro dollar. This started on Monday, March 3rd. That was this earlier this week. The euro dollar was down at 103, 103 and a half. Today, it's at 108, basically. It got as high as 108 500 ish. Okay. So that's a 5 cent change on on one of the biggest currencies in the world in a single week. So this is a kind of a, let's be honest, this is a very significant, this has been a crazy expansionary week on the euro dollar. This doesn't normally happen. This is from lowest low to highest high, that's about 500 pips. That's a 5 cent change in a major currency in a single week. That's not typical, but it can happen. A lot of it has to do with the tariff news and things like that going on. And for us, we don't care about the news events so much. We just care about volatility, and actually news events can help us because those news events can provide this type of expansionary time that can provide a lot of income for us. So anyway, so back to the exercise. So these expansions take hardly any time. Look how much time the market spent in this contraction right here. I would call this whole thing a contraction, right? That was a lot of time. That was basically February 14th, and that went all the way to February 27th. So that was like 2 weeks of just kind of sideways, a little bit of a breakout here and there type of thing, but for the most part, just kind of sideways, right? And then you got this huge expansion that just took 4 days. Okay, so a lot of the times the markets are just, and most of the time the markets are just sitting in no man's land. They're in this kind of contraction. And then only some of the time the market is in this huge expansionary time. This is the kind of phenomenon that takes place. Like, let me give you another example. So Tesla has been around since what, 2004, 2006, something like that. The amount of growth that happened from Tesla from 2019 to 2021 was more, that growth period was many times more than all of the growth from up to that point in Tesla, right? That's just one example of it. Same thing. Oh, let me give you another example. Home prices in the United States went up in 2020 to 2020, like middle of 2022. In that 2.5 year period, the amount of appreciation that homes went up was more appreciation than the 2012 to 2019 or 2020 period. It was about the same, actually. So if you had bought a home at January 2012, which was the bottom of the housing market, January 2012, and you had held that home until 2020, you would have made money because that home went up in value. Just a medium home in America, right? But if you had just bought that same home from 2020, held it till middle of 2022, you would have made that same appreciation in just a 2.5 year period, whereas it would have taken you 8 years to get it in that 8 year period prior to that. So that's just all markets do this. Stocks do this. Um, Forex does this, crypto does this. And so a lot of times just in trading in general, you just have to position yourself to receive those breakouts when they finally come along. And we don't necessarily know when they're going to arrive. You just have to keep positioning yourself to accept it when it finally comes, right? So this is one of those weeks where it just happened and we got a lot of that, which was really awesome. Okay, that should set the stage for what we're doing with the overnight system. Okay. I want to make sure you guys understand that concept because a lot of people kind of have this idea like, I'm just going to go in the market every day and just pull out a couple $100s on the day every single day. Like, as long as I could make two or three, four, $500 a day, I'll be fine. But that's just not how trading works. Most of trading is like, if you have 22 days in a month to trade, you'll probably make most of your money in a 4 or 5 or 6 day period. The rest of the time, you're just breaking even or even losing a little bit of money. That's at least in my experience has been that way. Same thing with stocks too. When I'm trading stocks, most of the money in a month is made in just a handful of days. You can have these 5 figure days, and then a lot of the rest of the time, it's just kind of like keeping it steady, staying afloat, maybe losing a little, maybe making a little. But what we don't want to have is these massive loss days. Okay, so I'm going to show you how you avoid those or at least mitigate those. Okay, so what we're doing is this. So I usually use a 15-minute chart to trade the overnight full box and half box strategy. So you're going to want to pull up TradingView sometime and practice this, but 15-minute chart, euro dollar is what you're going to need. You're also going to need one specific indicator. I use the sessions indicator and I use the Sydney session specifically. Here's how you can find that. So if you go up to indicators in TradingView and then you search sessions, okay, there's a lot of different sessions indicators and they probably all work just fine. I've used the one from Luxalgo and that works great. I don't know about this one right here, but the one I've been using forever is this one called Sessions on Chart by this developer. His name's Orox underscore AIF. There's 8,000 users, as you can see. So it's a pretty popular one. And I've enjoyed it and it's worked really well. So probably just use that one. If that's the one I'm using, you might as well use the same one. Okay. Once you get that on, make sure that you go into the settings of the indicator up here in the top right or left, excuse me, and just turn on Sydney only. The reason why you want Sydney is because this is the session that immediately precedes the London Open. Okay. So everything in blue is a Sydney session. So we're actually currently in one right now. And that's going to end here in about 6 hours, 5 or 6 hours. And then the Sydney session will be over. And then the markets or the Forex world will hand off the torch to the London market, which will open at 3 a.m. Eastern in about 6 or 7 hours from now. Okay. Then right here, you've got Sydney session from yesterday. Here's 2 days ago down here. This was Sydney right here. And then this was 4 days ago and so on. Okay. The one characteristic you should know about Sydney, and we don't need to spend a lot of time on this because we got to get going with some other concepts, but you should know that during this period of time, the euro doesn't move that much. The euro dollar doesn't receive a lot of movement during this time. There is going to be some movement, but not a lot. And the reason for that is because if if you're in Australia, this is your time to shine, right? Like the US, the Australia stock market opened about 2 hours ago. The New Zealand market also opened 2 or 3 hours ago. And then you've got Tokyo that just opened 20 minutes ago. And so that's kind of like their morning right now. And they're kind of trading and they're not really focused on the euro. They're focused on the Aussie. They're focused on the Kiwi. They're focused on their stock markets, right? And so the euro's usually not a highlight during this time. And the reason why this is important is because we're going to use the Sydney session to draft up a box. That's why you hear the overnight trading strategy full box and half box. When we mention full box, that what we're trying to say is the full Sydney session price action. Okay. So if this is yesterday, let's do a rewind. Okay. I'm going to rewind the market to the end of yesterday. This is the full box. So if I zoom in, this is all the movement of the euro dollar during the Sydney session. And I like to box this up, hence the full box, right? And that's the Sydney session price action. And we're going to use this as a reference to set up our breakout trade. So every night we're trying to set up a breakout, and the breakout is intended to buy if the market goes above the Sydney high, hence the Sydney box right there. And if the market decides to go down after the Sydney market closes and we hand off the torch to the London session, if the market decides to go down, we're going to trigger into a sell stop order and hopefully make money on the downside. Okay, if the market decides to go down instead. So we don't care if it goes up, we don't care if it goes down. What we care about is decisive movement where the market just goes straight up or if it goes straight down. That's what we really want to see. We had a couple of days like that this week, which were really fun to take advantage of. And now we're just on to the next one, you know, until we're looking for the market to do that again, right? Okay. So that's the full box, you know, like if I were to go 2 days ago, this is the box right here. I would just take a box on TradingView and I would just, you know, measure this and kind of put that, encapsulate that area, right? By the way, you can get this over here on TradingView. If you just go to the left side of the chart, you can find this where, you know, under the shapes here, I've highlighted my rectangle here. I've starred it so it shows up in my quick tools. And so I can use that on the fly. And then right here, this is a few days ago, you know, I can just keep doing. Now you don't need to do this for each one. It's just, I'm just trying to highlight that this is the box. This is the zone that you're using. Okay. All right. So let's go back to what we're doing here. So the idea with this is now you would project your setup. So when you're building a house, what do you guys do? You frame the house first, right? Like after you got your foundation set up, you frame it. Okay, so what we got to do is we got to frame our trade. So we're not going to take the trade yet. We're not ready to do that. We don't even know where our take profit's going to go. We don't know where our stop loss is going to go. We don't know where our entry is going to be yet. We have to frame it all up. So the best way you can frame this up is if you use a projection tool on TradingView. So if you come over here, and again, by the way, when are you doing this? This is the evening time. So sometime in the evening here in the United States, and I really don't care when you do this, so long it's like I would say after 9 p.m. Eastern is a good time and beyond. Anytime between 9 p.m. Eastern and let's say 2 a.m. Eastern is a good time to get this in. I would say the later the better if you can, but do not change up your sleep schedule to do it. It's not worth it. It will not be worth it to you. Trust me, I've tried that. It just be consistent with the time that you pick. If you're like, I can do 9 p.m. Eastern or I can do 10 or hey, midnight works great for me, then fine, do that. But that's when you would go through this process that I'm going through right now. Just picture yourself doing this 5 times a week, every night, Sunday through Thursday. That's when you're going to go in and do this. Okay, so I'm going to grab the long projection tool and I'm just going to put this up in the top right there. Okay, so in fact, I'll do it again. So all you got to do is just grab the projection tool. I've got it in my quick tools up here and click in the top right of that box and just drop it. Okay, and just click once and it'll drop right there. The first thing you got to do before you don't want to move the target yet. Don't move this up and down. We put our stop loss on the other side of the Sydney box. This is if you're trading the full box. I actually like to put this stop loss up just a pip or two from that low right there. Not much. The reason for that is you'll learn about it later, but basically if you put your stop loss flush with this low, the broker thinks you're trying to hedge. And so if you just put that just a pip or two, like just barely, like not a lot, just like that, you'll be fine. And then what you do from here is you're going to grab your take profit and you're going to frame this up, 5 times your stop loss. Okay. So that's how you set up your take profit and stop loss every day. Is it's all based off of the Sydney range. So the Sydney box, and you're putting your stop loss on the other side of the box, your buy stop on this side on the top, and then a take profit that's 5 times. Now, why are we doing a take profit that's 5 times? So the big thing is back to what we were saying earlier. You're trying to have big profits and small losses. Big profits, small losses. Okay. So when the market has a big breakout day, We need to accept as much profit as the market's willing to give us. We need those really, really profitable days, okay? Because a lot of the times you're actually going to lose on this trade. In fact, I'll show you those statistics in just a second. And it's okay. It's normal to lose. It's part of the process of making money is there has to be expenses, right? And so that's, our this is a business, right? And so our version of expenses is losing trades, right? Like if you were to open up a burger joint today and you wanted to sell burgers, you're going to have to buy burgers. I'm sorry, you're just going to have to. Like you're going to have to buy the buns, you're going to have to buy the condiments and so on. It's an expense. You have to do that. If you don't do that, you're not going to sell burgers, right? So it's the same thing with trading. This is a business. We want to make a profit. We're going to make a profit, but in order to do that, we have to have expenses. Our expenses are our allocated losing trades. So we have to plan for losses. Unfortunately, it's just part of the running the business. All right. Okay, so you're going to do that. And then we also have to frame up a sell trade too, because we're looking for the market to break out while we're sleeping. And so now you just bottom right corner, you're going to put that sell. You're going to put this not quite flush, but just a pip or two below that high, and you're good right there. So that's pretty much it right there. And now you just drag that take profit 5 times the stop loss. And you can see right there, I've got it right to 5. Once you get it pretty close to 5, you're good to go. And then that's your trade for the night. So you got the 2 trades all framed up. And now you can go ahead and figure out your lot size and then proceed to actually take the trade. Okay, this is the full box. Okay, we're going to get to half box in just a second. We're actually making pretty good timing here. Yeah, oh yeah, this is good timing. Okay, so we'll get to half box in just a moment. But before we get to half box, I want to go through the process of the lot size calculator and then how you would go and take the trade. Let's see. Muhammad says, is there a recommended time to set it up as close to London session as possible? So if you can, I mean, I'm not gonna look. Here's the thing. For me, it's not too bad. Like I'm up till midnight usually. That's like the last thing I do. And so I'll set this trade up like a minute or two before midnight mountain time, which is 2 a.m. Eastern. Now, I'm not asking you guys to stay up till 2 a.m. Eastern. That's my time zone at midnight to do it. So it's not too bad, but that's crazy talk. If you live on Eastern time zone, it's not sustainable. I've known people who have tried to stay up till 2 a.m. Eastern. It's not good. Don't try to do it. So, if you're just whatever your routine is, like if you go to bed early, 9 o'clock, just do it at 9. If you have to do it at 10, do it at 10. If you have to do it at midnight too, that's great. Now, if you could stay up till the time that I'm doing it, great. But is it worth your sleep? No, it won't make any difference. Over time, the results of the strategy will average out. There's some times where if you set it up early, you'll actually make more money than I will, because I'm setting up mine right at the Sydney close. Um, I don't know if it makes a huge difference. I've run some back tests. We actually have an algorithm that knows how to trade the overnight system. And I've run back tests on times to do it earlier or later. The results are marginal. Like it really doesn't make a huge difference. So that's why I'm saying um, I just ask you guys to be consistent at the time that you set it up. Um, if you live on the Pacific time zone and, 11 o'clock, 11 p.m. is the Sydney close, and that's a normal time to go to bed, then I would just say just do it at 11. But like I said, that's 2 a.m. Eastern, so I'm not going to ask you guys to do that, and it's not even worth it. So, but yeah, that's a great question. Okay, cool. So now that you've got this, you need to figure out your position size. So this is actually what we've got here is basically what we call the London breakout strategy. If you guys go on YouTube or Google and search London breakout strategy, there's a lot of other people that actually teach this. Okay. I'm not the first person to teach the London breakout, but this is where we kind of change. If you were to just do this every day with a fixed lot size and not change up your lot size and just every day, boom, you just try to capture a breakout, you would probably spin your wheels. You'll hit enough losses that the profitable trades probably wouldn't matter unless you control your lot size. And so that's what we do, is we try to stack the odds in our favor. And so this is where we kind of diverge with other groups that teach the London breakout. So we have this thing called the sequence multiplier, which is amazing. So this is it right here. I'm going to try to zoom into this so you guys can see this a little bit better.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
This right here, like I said, is called the sequence matrix or multiplier. Basically, what this thing does is it tells you what to risk each day. Okay, so you know how, you're not sure if when you're new to trading, you're like, should I risk one contract or a half a contract or 5 contracts? What should I risk today? All of that confusion is removed from you when you use the sequence multiplier. I'm going to take a picture of this real quick because I want you guys to have this. Here we go. Okay, so I'm going to put this in the chat box, and you guys can download this from the chat box there. It's just a picture. You can print it off. I actually printed one off. I have it over here, piece of paper, so I have it. I pretty much have it memorized at this point, but it's nice to have in case you forget. But yeah, that's nice. So what we do is if we have a losing day, we slightly increase our risk the next day. So if I lose on the first day at 0.25% risk, that's a quarter of 1% of my account. Then the next day, I'm going to risk 1.5 times that, which is 0.38%. That's 0.38% of my account. Okay. And then if that day loses, I go to the next day. And then the next day, we go up to 6 days in total. Okay. And then we try to get our win by the 6th day. Okay. And so what happens with the sequence multiplier is if you finally catch a breakout day, let's say on day 3, okay, let's say you've lost for 2 days in a row, but then you get to day 3, you're risking a little bit more money, right? This is a 0.57% risk. And the market has one of those big breakout days where it just goes straight up or straight down type of thing. And you capture a lot of real estate. You're capturing real estate at a higher lot size. And so your reward is amplified. Okay. So you're controlling where you get into the trade, and you're controlling also how much money you can make as far as how far the market goes. And thirdly, you're also controlling how much money is behind that trade. Okay. And so that's how you're able to amplify those profits. So no one I know teaches this. I think we're the only ones doing this, at least that I have found. And this to me has like been the game changer because you're controlling that most important variable, which is your position size. And so we're going in there and hitting the market each day with a different contract size to hopefully get an anticipated result. And so that's how we're able to. The reason why you would do this, by the way, I don't know if I was very clear on this part, but the reason why we use this multiplier is because we've had losses up to this point. If you think about it, right? You lost on day one, you lost on day two, and now you get to day three. We got to get that money back. And we're not just here to just get our money back. We're here to make money, right? So we have to make a net profit in addition to covering our expenses, right? And so this is how we're able to do that. It's this in addition to capturing so much real estate in the market, when the market finally breaks out. Okay. Once you get all of your money back plus a net profit, um, um, once your day, once you get all of your money back, then you'll go back down to 0.25%. So you'll restart. Let me show you what this looks like in the journal. So we have a record of every single trade we've ever taken with this strategy. So if you come up here, you can see um, right here, you've got um, like, for example, this was a winning day on March 3rd. We made $1,900 on a trade that hit the full take profit. Now, we had lost on the 28th. We lost $250. And then on the 3rd, we also lost one way on the trade, but then we also won on the buy trade. And so when you look at this, the net profit is $1,270 after losses have been taken care of. So what do you do the next day? Since we won at day two, 0.38%, you go back down to 0.25. So that's day one. So you're always going back down to the default if you're getting your money back. Okay. If you get your money back or you make money, you always go back down to 0.25. The only time you increase your risk the next day is if, in fact, you were left with a losing trade and a loss the day before, and then you just go the next day and the next day and so on. Bill says, if your day trade loses both ways in a double whip, do you just jump to the next day or do you go to day three? That's a great question. Yeah, it's just to the next day. Some days you're gonna lose both ways. I would say more than half the losers will actually lose both ways. 2 to 3 times a week, you should expect to lose both directions. And then the other half of the time, I would expect the other half of the losing trades or so, you'll probably just lose one direction, and then you'll still increase to the next step. Doesn't matter how big the loss was or how small it was. It's just to the next step. If you lost $100 or you lost $500, you're moving to the next step, and you're not skipping to day three or to day four because the loss was bigger. It's just to the next step and so on. Yep, that's a great question. And then Mohammed says, do you recommend setting up multiple pairs each night? No, but there's a good reason for this, and you could do that, but I don't do that, and here's why. A lot of currency pairs move in tandem. So let me give you an example. If Bitcoin is up today, do you think the other cryptocurrencies are up or down? Probably up. If Coca-Cola, McDonald's, Tesla, Amazon, Facebook, if all those stocks are up today, what's the chances of all the other stocks pretty much being up today? All other 19,000 stocks out there. Probably most of those are up. So the markets move in tandem, right? And so just because you take more trades doesn't mean that you're hedged or that you're, what's the word, diversified. Okay. Just taking more trades doesn't mean you're diversified. And so, because a lot of times the markets move in tandem together. And so you're really better off just focusing on one pair, because if one pair it has a whipsaw, probably a lot of other pairs had a whipsaw too. And I don't think it's a great idea because you might wind up being caught in a lot of whipsaws multiple days in a row if you try to diversify. So I also have learned in trading, diversifying is not good. I think when you're investing in a 401k, pension plan, or IRA, diversification is awesome, but not in trading. Trading is not a diversified, that's not how you make money in trading. uh, it's kind of the opposite of your IRA or 401k, because here we're trying to exploit opportunity, right? And the way you exploit opportunity is to apply capital at an opportunity. And so that means don't hedge. That means don't diversify. That means get in when the market's primed for an opportunity, right? So it's a little bit of a different mentality than like your long-term investments, right? Okay, cool. So this is yeah, and so Lee, exactly. So Lee says there's definitely correlation between different pairs. Exactly. So because there's correlation, you're not really gaining much by trading multiple pairs. You're better off just putting more money on one pair. Yep, exactly. Okay, great. So once you're okay, so we got to move on. So this is good. So now you got the multiplier. So let's say I was trading on day one. I use this 1.5 multiplier. You could use a 1.25 multiplier. It's more conservative. I use the 1.5. The 2x multiplier is very aggressive. I don't recommend it unless you're trading the Reapers, which we're not talking about tonight. But the Reapers are a very, very aggressive strategy. And so that's the only time you'd use the 2x multiplier. But we use the 1.5 for the overnight, both half box and full box strategy. Okay. You're mostly going to be hanging out right here. All right. Okay. You guys can also get access to this journal. Everybody can touch this. Here's the link to the journal in the chat box. Just request access if you can't get in. So if you click that link and you're like, I can't get in, just request it. You'll get in tonight. And then make sure you save that link for later. All right. Okay. Okay. Now we got to go through the lot size calculator. So on the website, once you've framed up your trade, like we've done here at night, then the second step is to go to the lot size calculator on the website. So you go to free tools. Once you click on free tools, you're going to click on lot size calculator. Okay. Once you're over here, you're going to see the calculator pull up, and you got to fill this out to figure out what risk you're going to take. This is how you treat this like a business. All right. Um, a lot of traders will skip this part with most strategies, and it's a detrimental mistake. The more you can master this, the sooner you're going to feel ready to go apply for 100 grand, 200 grand, or more capital, because you're going to feel like, oh wow, I've got a system in place. I got my risk under control. I guess I have confidence now. So now I'm going to go out and get a couple of prop firm challenges. But you don't want to go out there and make money trading and wonder how you made the money in the first place. If you're feeling that, that's not going to engender confidence going forward. So we got to use this with every single trade we take. So we're trading the euro dollar. Your deposit currency is your local currency. In my case, that's the US dollar. Then you would put in how many pips you're risking on the trade. In the way you would figure that out on full boxes, you would just measure this box. We cap this box. I know I didn't do that part, but this box should never exceed 30 pips. Okay. So let's say that this is at 30. We would put in a 30 pip stop loss. 30 pips or 29 or 28 would be fine. Then you would put in your account size. Let's say that's $100,000. The pip size is something that you don't mess with. That is just how pips are calculated. Um, yeah, don't worry about that. Then the next step is your risk. This is very, very important. So this is the number that you're grabbing from the sequence multiplier over here. So if you're on day one, you're just going to go 0.25. If you've had 3 days in a row of losses and you're on to day four, you would risk 0.86. So you have to keep track of this with a journal, or you can use my journal to keep track of it. Either's fine. But this is very important because this is the very thing that gives us our edge with the overnight system. Very important that you follow this. Um, yeah. So, and also a lot of people will just throw in like 0.25, or they'll just say 25. That's 25%. That's not a quarter of 1%. You have to type in the full 0.25%. So make sure you get that zero in and then 0.25, right? And that's just the default risk every day. If you've had a profit, like if you had a profitable day, you go to 0.25. Contract size on a with the euro dollar is always 100,000. So don't mess with that. Just leave that there. Don't change anything. Then you click calculate over here. You're going to get your lot size. TradingView uses units. Okay, so you would put in 83,333 units. Don't worry about the 0.33. In fact, it may not even let you do that. So you would put in 83,333 units for that trade. For your lot size, you would put in, like if you were using like MT4, MT5, Trade Locker also uses lot size. You would put in 0.83. Okay. And then it'll say what you're risking. It's saying, hey, if you lose on this trade, you're risking $250. And if that's an amount that you were expecting, then you're good to go. If that's not what you were expecting, then we need to go back to the drawing board and, figure out what variables in here we need to change. Okay, so now we would be ready to go. We would go over here to the market. Let's say I'm taking this trade with you guys. Let's see. Actually, I can't do it in rewind mode. So let me get out of rewind mode. Let's just pretend I'm going to take the trade with you guys. I'll do it real quick. It's a pretty simple process. Let's say I'm going to set up this buy order. All I would do is I'd click the buy button up here in Trading View. And then very first thing you got to do is change this to a stop order. We always use stop orders with the overnight system. Then you got to put in the price where you're going to buy. And that's that upper gray number. So you know how we framed up our trade? Now we get to put this together now. So we've got our frame here and we know where our buy is going to be at. That's that upper gray number. So we'd be like, okay, it's 1.08 1.08240. You might need your glasses. You might need to look at the screen closer if you can't quite see it, but you got to get that number correct and in there. Then what you're going to do is you're going to put in your units. Don't worry about these ticks. I had some people ask me about this. This is just the distance that this price is to the market. That will just auto adjust. Don't worry about that. Then you're going to put in your units. What's that number, guys? That's exactly what we just figured out over here. That's 83,333. So we just put in 83,333. All right. Then we put in our take profit and stop loss. You click those on, but then you have to adjust them. I like to do it by the pips. You could do it by the price. You could do it by a dollar amount. You could do it by percent risk, but I just do it by the pips. So if you just hover over your trade, you can see what it says. That says 194.6. You could just do 194, 195 would be fine. And then that's good to go. And then for the pips at risk, that's 30 pips, right? Why do we know that? Because that's what we put in originally right here into the lot size calculator. So as long as this number right here, this is how you can double check your work. If this number right here, that $250, is exactly the number that you got right here on the lot size calculator on the website, then there's a pretty good chance you did everything correctly. Okay. And then you could go ahead and take the trade. I'll go ahead. Actually, no, I'm not going to post this trade on this account. It's not an account I want to do that on. But then I could just click buy, and then the buy stop would appear right here, and it would be ready to go. And then I would just need to do the same thing for the sell. Once I took that trade, I could go in over here, click sell, and I could fill out this information for the sell. And then you'd be done for the night. Okay, so that's half box, guys. You're doing that every single night. You're going to want to follow the journal, put in your correct lot size, and just do this every single night. If you guys need extra help, one of the things that I do, if you're kind of new to taking the overnight trade, I don't list it on the website under the booking page, but per request, I'll meet with you in the evening time to take this trade, and we'll coordinate a time to meet for like 15 to 30 minutes to just take the trade together. You'll watch me take my trade, and then I'll watch you take yours and kind of walk you through it. So if you really need that extra help, don't hesitate to reach out. I'm happy to make sure, because once you get it, and you're kind of good for a long time. You're maybe forever. But I want to make sure each one of you knows how to do it. And I get it, because there's a lot of things that I do that's just so secondhand and so easy for me now, because it's just I've done it for a long time. But if you're new and you're like, man, I really want to figure this out though, can you really help? That's what I'm here for, guys. That's what I do. So just email me and message me, and we can coordinate a time to meet in the evening to do this together. All right. All right, cool. So let's finish our topic. So we got some time here to just touch on the half box and the difference between the two. So this is the full box strategy. This is the strategy that we use. It's kind of like the most vanilla of the vanilla, okay? This is what most of us use to pass our prop from challenges. This is a strategy that I believe the drawdowns are lower. Statistically speaking, the drawdowns are lower to pass your challenge doing this, but it's not the most profitable of the overnight strategies. In fact, the half box is much more profitable. So why would we not trade the half box if it's the most profitable strategy? And the reason why is because when you're trading with a prop firm, you have to worry about your drawdown. It's a real thing, right? If you go past your drawdown, you'll fail your challenge. A lot of you have already done that. I've done that myself with other systems, and it's not fun, right? When you fail your challenge because of drawdown, and it's the most common way to fail a prop from challenge is drawdown. So it is a big deal. And so I think the full box, what we just taught, is more suited for that, and the half box is not so. And we're going to talk about why. But first, let me show you how to trade half box. It's really simple, guys. It's the same thing we just did together, but instead of using the full Sydney box right there, you're using the half box. So the half box looks just like this. Instead of having your stop loss um, on the other side, you're just putting it midway through that box. Same thing with your sell right here. You're putting it just halfway through. So the buy stop and sell stops will still go at the exact same prices. They don't change, but the stop loss are just halfway through instead of on the other side. That's it. And then obviously this take profits come down because those are still 1 to 5. So these take profits are a lot easier to get to. You're going to hit these take profits a lot more often on the half box than you would on the full box. Okay, that's the only difference that you got right there. All right. And that's it. That's literally the framework for the half box. Okay. There's the only difference. It still follows the same sequence multiplier. Yeah. It's the same thing. You just have a separate journal for it. That's it. So since that's it, now let's talk about the statistics of the two. This is perfect. Okay. So I've got two journals in here. The first one we go through in the morning call is the full box. Okay. So this is the one that we talk most of the time about. And it's actually up since May of last year. It's up $35,765 on a $100,000 account. That's pretty nice. That's a 36, almost 36% return in not even a year. That's pretty darn good. Okay. And the drawdowns on this haven't been terrible. I mean, you can actually see the worst drawdown. So at one point, the full box got up to 128 or $129,000, and then on November 4th, it got down to 121,000. So yeah, you could experience an 8 or 9% drawdown, and which is not good. You don't want to have those all too often, but it that is the worst drawdown that's ever happened on the full box in this almost year that we've been trading full box. Okay, for me, I'll take that. An 8 or 9% drawdown is really good to make a 36% return. And then I'll also mention the S&P 500, which is the number one asset inside your 401k or your pension plan. The S&P 500 pulls back 10% twice a year on average for the last 70 years. So even the thing that we've been told is super safe, and the thing that's like, I'm not saying you shouldn't do this. I'm just saying that the thing that's the standard in the markets, which is the S&P 500, that's the king asset in US equities, is the S&P, and that thing pulls back 10% twice a year for the last 70 years, right? So to me, this is an 8 or 9% drawdown in the Forex market as a day trade, and you're making 35, 36% a year. I will take that. Like, to me, that's incredible. Like I think that's amazing actually. So and it's up to you. I mean, everybody, I mean, there's other things involved. I'm not trying to give financial advice, and I'm not asking, by the way, please don't mess with your 401ks, your IRAs, and so on. I'm not asking you guys to do that because there's a lot of other ways you can make money trading without touching those things. You can get funded with prop firms, which is going to be much more lucrative for you than trying to, take your hard-earned money that you've been saving for decades. Don't do that. I'm not asking you to do that for the record. So, um, yeah, yeah, good stuff. Okay, so anyway, if you look at the numbers here, this strategy, it's interesting. When I talk to people on the phone, they ask me, "What does the overnight trading strategy make, guys? Like, what's your win rate?" That's the number one thing people ask me on Facebook. That's the number one thing I get asked in phone calls is, "What's your win rate?" And I'll be like, we win 41% of their trades," and they're like, "Oh." You only win 41% of your trades? I'm like, yeah, it's amazing. And because there's two sides to the story, right? That doesn't tell you everything about a strategy. In fact, win rate, to be honest, doesn't tell you much. Okay. You know what tells you a lot about a strategy? It's the RR ratio. Okay. So we have a 1 to 2.13 RR ratio. That means we're winning more than two times on our winning trades than our average losing trades. So on a $100,000 account, this has averaged an $818 average win, and our average loss has been $383. All right. That's a good ratio, especially at a 41% win rate. That gets you this kind of return. So we've had a gross profit of $106,000. There's been $69,000 of gross loss for a total of $36,000 net profit, right? That's pretty good. Now, let me show you half box. Let's wrap up on this and let's hit, guys, get your questions in now because we got less than 5 minutes left. So get them in and then we'll get out of here. So here's half box. This is actually a much more profitable strategy. Look at this. In that same period of time, half box is up $56,449. Okay, that's net. All right, that's a 56% return in less than a year. All right, much better. And the RR ratio is also much better. Look at this, guys. So you've got a 1 to 3.55, which is just incredible. So our average win is $1,800 on a 100K account. Average loss is 500. Um, those are fantastic numbers. But look at this. Our win rate on half box is 29.48%, which is actually higher than it normally is. Last year, I remember for most of the year, the win rate on half box was closer to 27%. We've climbed now to 29.48%. It will be incredible if that climbs to 30%. And I don't know if we will, but if we do, that would be amazing. So that's a pretty low win rate, isn't it? You're only winning basically a third of your trades, a little less than a third of your trades. That means when you take 100 trades, you're losing 70 of them, and then you're only winning 30. However, those 30 are nearly four times bigger than your average losing trade. And so that's why we're able to come away with such a great return on this. Now, the drawdown is worse over here. Let's talk about that. So, obviously, this makes more money, like 60% more money than well, no, it's like 40, 50, 40, no, 40% more money than the full box. So it is a significant amount. But should you do this is the question. Well, let's look at the drawdown. Remember, full box has had a drawdown that was like 8 or 9%. Check this out. So on August 15th, we got to a high of $139,000 starting from 100K. Pretty good. This thing pulled back pretty hard before the election, like the 2 months before the US election. The euro dollar just had no decisiveness. And so we had just a handful of wins during that 45-day period. And we got to a low of $116,000. So that went from 139,000 to 116,000. That's like a 23% drawdown. Okay. Yeah, that's pretty gnarly, guys. A 23% drawdown before that thing started to come back up. So drawdown is not suitable. That would not work for a prop firm. So I just want to make sure that's pretty clear. But if you're willing to take the drawdown and this is you're trading on your own with your own personal capital, this actually might be worthwhile because of the potential returns here. So if you're looking for slow and steady, do full box. If you're that aggressive guy, then or that's just your style is to be aggressive, then definitely do half box. But don't do this on a prop firm, because eventually you'll probably fail your prop firm challenge if you go through a period like that again. So, see, Geraldo says, so you recommend to start out with full box at very first? Yeah, I think full box is a great place to start, less risk, and that's what you'll be doing with your prop firm account. So you might as well trade full box. But I just wanted to let you guys know there is a more profitable strategy out there. And there's other ways to modify this as well that could make more money. Um, but this is definitely another option if you're looking to make more. But I wanted to go over the pros and cons, right? Because there's certainly advantages to doing either one. So, all right, guys. Any questions before we wrap up? This is good. We finished in time. So that's awesome. Okay, guys, we're gonna take a 2 minute break. If you guys want to come to Cot Report, great. If you don't want to, that's totally fine too. We're gonna talk about the divergent signals and the scanner, and just for those of you that are interested in digging into Cot data, we'll do that in a few minutes. So appreciate each one of you. Thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar.